Okay, another weekend of chop, but I think now the chop is getting to a point where it's chopping a lot of people out. Look at this lack of volatility in Bitcoin. Now 63,410. We are now in day 76 of this chop. The good thing is that this tells me that we're going to get towards the end of the bear market. This is like really the last part of the bear market, where instead of the market trying to chop you up with price, what the market's trying to do is trying to chop you up with absolute boredom. And it's no different to the other bear markets. If I look at some of the other bear markets, right, what we did in the other bear markets was we tested the 200-week moving average. So if you look at this metric over here, which is a 200-week moving average on the weekly, you can see we've been flirting with the 200-week moving average for a couple of weeks. This week, we actually closed below the 200-week moving average, which is not unusual. It's not unusual. It happened in the last bear market as well. We broke below the 200-week moving average. We stayed there for quite a while last time. In fact, I think last time we went about 30% below the 200-week moving average. Was it 30% below the 200-week moving average before we then bounced. In the bear market before, or the bull market before, the 2017, 2018, we bounced off the 200-week moving average. So we are near the end of the bear market. Now, one thing that I saw, which was making me pretty bullish, is what you can see is that there hasn't been a real move in Bitcoin. The move in Bitcoin was from what was on the weekend 62,800 to 63,500, which is, in Bitcoin language, it's not even a move. Like, you can't even call that a move. That's like, it's like nothing, right? But you can see that the altcoins want to move. So as soon as we get anything to do with Bitcoin moving, the altcoins actually want to move. And I want to spend some time talking about that, because I think it shows you what's going to happen in the next cycle, right? We're at the end of this cycle. You can see every bear market's the same. The end basically kills you by boredom, right? Now, I want to show you, you see these bear flags. So this is the first bear flag that we had. In the first bear flag, what you'll notice is we went to this level over here. And then the market tried to suck us back in and gave us an increase in prices of 21% before it crashed again. If you look at the next part of the bear market, which was here, we went here, and then the market gave us 35% before it actually crashed again. If you look at the last part of this, there's pretty much no move. Now that is very similar to what actually happened in the last couple of bear markets. So the first bounce quite high, the second bounce slightly less, and then it's basically chop sideways, right? The good thing is that we're getting to the end of the cycle. The other good thing is that the altcoins are starting to respond. The altcoins are basically telling you, as soon as Bitcoin gets a bid, even if it's just from 63 to 70, then the altcoins are going to start moving. So like you think about pump fun, right? Bitcoin hasn't been moving. The trenches are getting pretty wild. And if you look at pump, you can see that in the last month, pump's basically gone from 16, doubled in the last month. Not the only one that's doubled. There's been a whole lot of others that have actually doubled. I'll show you one or two others while we're here. So let's look at 𝗙𝗃𝗃. 𝗙𝗃𝗃 is another one that we follow. Here we go. Also doubled pretty much in the last month, right? So it's saying to you that when Bitcoin actually starts moving, the market will actually start moving and will actually start getting good returns. But the market is waiting for this cycle to end and for the next cycle to wake up. That's exactly what's happening, right? Now, the old cycle, the one that got us here, and we must thank all the fallen soldiers that actually got us here. But the old cycle that got us here was, I want to say, the Saylor cycle, right? So it's like Michael Saylor buying every week. If you were to characterize the old cycle, it's that cycle over there. It's Michael Saylor tweeting about the dots, about they need more colors, they need more dots, etc., etc. That is, for me, indicative of the old cycle. And the things that are indicative of the old cycle are, I think, going to be a little less relevant in the new cycle. The last cycle was Saylor buying, Saylor driving the market. If you think about who brought money into the market cycle, it was Saylor. Saylor buying $50 billion or $54 billion worth of Bitcoin, right? But that cycle is ending. And you can see it's ending because yesterday, Saylor didn't even tweet. Saylor actually hasn't bought Bitcoin since June. So June, July, August, Saylor basically hasn't bought a single Bitcoin. In fact, Saylor's been a net seller of Bitcoin. He was a net seller again this week. So what did he do? I don't think he actually did anything with Bitcoin. They bought no Bitcoin this week. They increased their USD reserves by $150 million, which means that they sold MSTR at an MNAV of 1. They sold MSTR. And they bought STRC. He purchased another $132 million in STRC. I think that Saylor's already spent about $1 billion or so trying to prop up STRC. STRC still is trading at $95. So not at the $100 yet. Saylor now spent $1 billion or so propping up STRC. You may say, no, well, he hasn't actually bought $1 billion worth of STRC, but he's actually sold Bitcoin to fund STRC, actual purchase of STRC. He's also sold Bitcoin to increase his cash reserves so that the market will feel more comfortable with his cash reserves so that STRC will go back to $100. And so right now you could say Saylor is in the hole for $1 billion. And when it gets to 100, the question is, will he be able to buy more than $1 billion? That's the big question. How much is he going to spend to get STRC back to $100? And then what's going to happen? If he's selling $1 billion worth of Bitcoin to get STRC to 100, and then when STRC goes to 100, he can't buy $1 billion, then it's a net losing game. And I suspect that, in the old cycle, Saylor powered the cycle. I suspect in the new cycle, he's not the guy that's powering the new cycle. That's the bad news. Because, as I say, we must respect all our fallen soldiers, all the people that actually got us here. Saylor actually did get us here. Maximum respect for what Saylor did. But I don't think that model is the model that we want taking us into the new cycle. The new cycle is it's already been defined. And the money for the new cycle is already starting to flow in. If you know where to look, you'll find that money. That's what I'm going to show you in the show. The old cycle is the Saylor cycle. And I'll show you another thing around Saylor. We were the first ones to actually make a show about this. But you remember that that when 10-10 happened, it was because the MSCI, we uncovered that as well. We uncovered the fact that when 10-10 happened, it was because the MSCI, which is one of the largest index agencies in the world, right? They published, or they were going to exclude MicroStrategy from the MSCI indices because they said, look, we don't want passive companies that just hold assets as part of our indices. We want companies that are actually operating companies to be in the index. Now, you remember there was a whole consultation period, and eventually in January, they postponed it. And now this thing has reared its ugly head again. And what they're threatening to do now, we've made a whole show about this, but I'll recap it for those who missed the show. Basically, what they're saying is that they want to exclude non-operating companies that fail new eligibility screening criteria. They want to exclude them from MSCI indices, right? So they're basically saying, look, if we deem you to be a non-operating company, you will be excluded from MSCI indices. The problem with being excluded from MSCI indices is because fund managers fund managers that track indices, basically, they have to hold whatever's in the index. So if you're in the index, they have to buy those shares. And if they're not in the index, you don't buy those shares, right? That's basically how it works. Now, by excluding MicroStrategy effectively from the MSCI indices, it would mean that any index that tracks the MSCI index basically removes MicroStrategy. And MicroStrategy doesn't make their criteria right now. So it would be one of the ones that is definitely removed. That is what happened in October 10th. That's what we think caused October 10th collapse. It's happening again. It's reared its ugly head again. And Saylor's actually now responding to it. Now, here's the response from Saylor. It says, digital assets are assets. Index providers should measure markets, not decide which asset companies are allowed to own. Which asset companies are allowed to own. MSCI's proposal puts it out of step with the regulators, with markets, and with its own customers. Bitcoin doesn't need MSCI, neither does strategy. I want to dig into that a little bit, right? So the first part of it, I think Saylor's right. Digital assets are assets. Index providers should measure markets, not decide which assets companies are allowed to own. 100% I agree. MSCI's proposal puts it out of step with regulators, markets, and its own customers. I think I agree. Here's the part I don't agree with. Bitcoin doesn't need MSCI, neither does strategy. That's the part that I'm having a problem with. I would have rather that Saylor attacked this in a more logical, structured way than basically said, oh, we don't need MSCI. Because you actually kind of do need MSCI. And I'll explain to you why you need MSCI, right? If you look at who MSCI is, MSCI, I ran this on ChatGPT, because that's what you do these days. So MSCI has 17 trillion of $41.5 trillion worth in equities. Okay, you understand, like 17 trillion, 41%. So I would not say MSCI controls 41% of all global equity investment because the denominator excludes things like sovereign wealth funds, pensions, which are separately managed, but it's big. At least 10 to 15% of assets are indexed to MSCI indices. And if you are, I mean, you cannot say that we don't need you when 10 to 15% of investable assets are in MSCI indices. Now, unfortunately, I think that this one might actually pass. That's the unfortunate part. The fortunate part is I don't think it actually really makes a difference. Why? Because I think, as I said before, I think Saylor was great for the last cycle. And I think what we actually want is we want him to become less relevant in the next cycle. You don't want Saylor or any entity holding 5% of the Bitcoin supply, 6% of the Bitcoin supply, operating or being in the market. I think when an entity owns 5 or 6%, that's enough Bitcoin. You don't want them to keep increasing their Bitcoin until eventually they own 8, 9, 10%. That was great for what got us here, but now we need to look forward. Now we need to look at the next part of the crypto bull market. Now, for me, the next part of the crypto bull market looks something like this, right? I listened to this interview with Matt Hogan. He was on our show recently, but I want you guys to hear this because this is the important part.
Some of the biggest catalysts are in places that crypto Twitter is not looking, right? If you talk about Morgan Stanley, Wells Fargo, UBS, and Merrill Lynch, the four sort of largest wealth management platforms, they control about $20 trillion in assets. The kind of catalyst that I think will be a big part of the next cycle, for the majors at least, are Bitcoin, Ethereum, and other assets being added to the model portfolios on those platforms. You've already seen it on a small scale at places like Wells. I think you're going to see it at many other of those providers over the next 6 months. Again, $20 trillion of assets there. If you're starting to get model allocations of 1 or 2%, that's a huge amount of inflows. So I think a lot of crypto thinks about the Fed, they think about the Clarity Act, they think about Reg Crypto. All of those are really important, but many of the biggest catalysts are actually internal to these wealth management platforms that are going to be the marginal buyer of the large cap assets, I think, over the next few years. And I would watch for those sort of small news stories that actually trigger tens of billions of dollars of flows on a persistent basis for years in the future.
Okay, so let's talk about what he's actually saying there. He's saying, look, the big flow of money will actually come from Wall Street increasing their asset allocation to Bitcoin. Now, they do this, or one big part of this is when they increase what they call model portfolio allocation to an asset. So what do they mean by model portfolio allocation to an asset? If they say, for example, that a model portfolio should have 1 to 2% in Bitcoin, and then they say, okay, well, you look at the total investable assets, let's say it's 50 trillion. You say 1 to 2% of that must be invested in Bitcoin. And then that gives you basically gives you a multiplier, right? Now, you're already starting to see it happening, right? So if you look at the asset, the starting point is that right now, individuals own about 57% of all the Bitcoin in circulation, right? If you take the ones that are lost, there's 16.7% of Bitcoin that are lost. Then you take those that are held by miners, which is 1.9%. Then you got Satoshi's wallet, which we think is going to be frozen forever, 6%. 4% or 5% is still to be minted, hasn't been mined yet. Governments seized and hold 2.6%. The ETFs hold 5.8%, and the treasuries own 6%. So we can assume that the majority of the Bitcoin, 50 to 60% of the Bitcoin, is still held by individual holders, right? And what we can also assume is that Wall Street will start increasing the allocation towards Bitcoin. You're starting to see it in the headlines, right? So 𝗙𝗪𝗪, who's one of the most prolific investors, I think, of all time, he increased his BlackRock ETF stake. He's increased it from 500 and something to 688,529 shares. It's an increase from 579,083. He's not the only one. There's Morgan Stanley increasing their crypto bets. There's if you look at the headlines, there's multiple headlines all the time of companies or allocators increasing the exposure to Bitcoin. And that's the writing on the wall. The minute we get the model portfolio allocation increasing from, say, 1% to 2% and 2% to 3% and 4%, that is where the real money will come into crypto. Because that's not us chasing retail money. It's not us chasing an individual investor, etc., etc. It is us getting a share of the total investable asset. So just have a look at this. This is BlackRock. BlackRock was saying, we believe that a 1 to 2% allocation for Bitcoin is a reasonable range for multiple asset portfolio investors, right? If you look at it here, Morgan Stanley, 0.0 to 4%. Schwab, 0.5 to 5.6%. Fidelity, 0 to 7.5%. Bank of America, 1 to 4% of assets. If you take those and you basically say, okay, let's average them. What is the number that we basically get? We get probably between 2.5 and 4% of all investable assets that should be in crypto. Now let's look at what that actually means. The 15 largest asset managers, BlackRock, Vanguard, Fidelity, State Street, JP Morgan, Morgan Stanley, Merrill Lynch, Bank of America, Goldman Sachs, UBS, control $64 trillion of assets. If they go to 2% of the $64 trillion worth of assets, that's $1.28 trillion flowing into the asset class. Only thing is, if you look at the market cap of the asset class, it's under $2 trillion. So that would bring in 50% more money into crypto than the entire market cap. Now, if that happens, that would 5.6x to 11.1x the price of Bitcoin. And that's the math that you need to be looking at, right? The math that says if the big capital allocators, the real capital allocators, they actually don't even need to increase. They just need to get to the number that they said that they were going to invest. They said they were going to invest between 1% and 4% into these assets. If that happens, that's a $1.2 trillion inflow. If we get a $1.2 trillion inflow, the multiplier effect on that gives us between a 5.6 and 11.1 increase into Bitcoin. Then you may ask yourself, well, why hasn't this happened yet? And I'll tell you, and when does it actually happen? So I'll let you know in on a little secret. We always look at these capital allocators as if they're the smart guys in the room. The truth is that they're not the smart guys in the room. The truth is that they buy when the markets start going up. They don't buy the dip when the market's low. They buy when the market starts going up, right? The biggest advertisement for an asset class is the fact that the asset class is actually going up. So if you look now at stocks, everyone wants in on stocks. Everyone wants in on internet stocks. Everyone wants in. Okay, I get it. But let's quickly just go to the S&P 500. Okay. What happened to you the last time you bought a market that looked like that? Like, what happened to your portfolio the last time that you bought a market there? Literally at all-time highs after a breakout of the channel. I'm not saying you're not going to make money, but I'm saying that that's what these guys are chasing at the moment, instead of going to chase the bargains and the discounts. So when will they come? They will come when the price starts moving. So as soon as we get 1 or 2 green candles and we go from 65 and we go to 75 and we go from 75 to 85, then that's when they'll start coming in. When that happens, they will start saying, oh, you see, you're under allocated to Bitcoin. You should be more allocated to Bitcoin. You're under allocated to Bitcoin. And then they'll all start going between 1 and 2 and 2 and 4%. And when that happens, the entire market will shift. The first thing that will happen is a lot of money will go into Bitcoin and ETH, and maybe a little bit into Solana because of the ETFs. Then another thing will happen. So the first thing that happens is Bitcoin goes up, Solana goes up, ETH goes up. But then another thing happens. And the other thing that happens actually relates back to the altcoins, right? What I mean there will be a class of altcoins that will actually start running. What is the class of altcoins that will actually start running? I think it is the class of altcoins that actually have earnings or revenue and have a buyback mechanism. Why? Because that's something that Wall Street can pretty easily understand, right? So Wall Street can pretty easily say, look, I understand Hyperliquid. It makes X amount in fees. It uses those fees to go back and buy tokens on the open market. Then it burns the tokens. That's something that I can understand. They may not really understand the layer ones because the layer ones are pretty complicated, but they will understand app revenue. They will understand usage revenue. They will understand all those metrics. So what do I think happens? How do I think this whole thing basically plays out? Let me explain it to you. So the first thing that happens is that the price of Bitcoin actually starts to move. We got to break out of this sideways chop. When an asset is moving sideways like this, no one wants into the asset, right? Even like us crypto people, we don't want into the asset anymore. Like, why? Because it's boring. It's boring as hell. I'd rather go and, play on-chain or play stocks than sit here and wait for this asset to basically chop sideways forever and a day. When it actually does start moving, and it'll happen, I think maybe there's one more leg down. If not, there's maybe a couple of months of sideways chop. But I think soon we're going to get some kind of movement in Bitcoin. When we get that movement, you know what happens? When we get that movement, all the money starts to flow into Bitcoin. when the money starts to flow into Bitcoin, the genius capital allocators say, hold on a second, you're under allocated, everybody's under allocated. What happened to the 1, 2, 3, 4%? People get, as the price runs, people get more and more and more and more aggressive. When that happens, Bitcoin goes up because of that momentum. But, at the same time, a new class of altcoin basically starts to emerge. And that's the altcoin that has clear revenue. And on top of getting clear revenue, they also have a clear way of dispersing that revenue with their token holders. And those are the tokens that actually are going to win. So look at Pump Fun up at almost 0.3 or sorry, 0.0033 you know what I mean. And a whole lot of other ones. All the ones that actually land up with good tokenomics actually start landing up making money. So that's what I think is going to happen. And again, when does it happen? I can't give you an actual date, but I can tell you exactly how it happens. It happens when people start allocating. And there's always a lag. If you go back to gold, right? If you look at gold, portfolio managers actually put, how much they actually put in a portfolio. BlackRock puts between 2 and 4% of portfolios into gold. JP Morgan, 5%. Goldman Sachs, 5% into gold. Now remember, that's after a gold run. And what you can see is that when the gold ETF was launched, they also had a couple of years of like sideways chop, and then only gold actually started to catch a bid. And so it takes time for this model portfolio thing to actually catch on. But once the model portfolio thing actually catches on, then you get to this all-time high thing. So it's just right now a patience game. I think I've told you exactly how it's going to play out. It's going to play out exactly like I said it would. Mark my words here, that's exactly what's going to happen. I mean, here's a list of the revenue generating protocols. One of the layer ones is Canton. All fees collected by Canton are buy and burn. I don't know if you guys know that, but all fees collected by Canton are buy and burn. Yeah. All right, what else is there? Couple of things. Number one, who's coming to Token 2049 in Singapore? Happening. Oh, what else is there? Couple of things. Number one, happening in October. Okay, happening in October. If you want to come, there's a link for you over there. There's a link there. You see the link over there. Sign up on that link. We're going to have a party there. If you buy your ticket using our link, we'll also invite you to our party. I think that's fair, right? So if you're thinking of going to Singapore, wow, you better hurry up because these things just keep going up. If you're going, buy it now. There's a link below. Use that link. If you buy a link on our ticket, we will give you a free ticket to the Crypto Banter Party, which happens in Singapore. We have it every time. It's the biggest party ever. What else is there? I think that's it for today. Yeah, that's it for today. All right, my friends, I'll see you guys again tomorrow. Hopefully, when we wake up tomorrow, $10,000 candle on Bitcoin. But if not, then at least we're 1 day closer to the end of the bear market. Right. Yes. All right, let's go. See you guys again tomorrow. Until then, trade well, my friends.